Hey gang, if you've been watching the previous videos, you know that we are diving deep into accounts receivable. And so this video is gonna focus on the allowance method to properly account for uncollectibles. So buckle up your seatbelts and get ready for a ride. But first, bags. So when dealing with accounts receivables, companies are always faced with the probability of being able to not collect on accounts, which we call uncollectability. And so there are two ways to account for uncollectabilities: the allowance method and the direct write-off method. So with the allowance method, it properly estimates at the end of the period the particular amount that is expected not to collect, i.e. the portion of uncollectability. That way, accounts receivable on a balance sheet could be reported at its net realizable value. Simply meaning the gross amount of the accounts receivable value minus the allowance for uncollectible account balance. And so in here, I like to dive into the entire process of the allowance method and focus on the three major journal entries that should be mastered if you're going to use the allowance method. You must also be aware with the allowance method that there are two choices in terms of making the calculations for the estimate. One being the percentage of sales and two being the percentage of receivables. But before we get into the nuts and bolts of the estimate calculations, let's focus on the journal entries. Journal entry number 1, the estimate. So in terms of the allowance method, whenever we make this estimate, it is basically at the end of the period. And so what happens is we sell on the account and we make a proper estimate based on either the percentage of sales or percentage of receivable method, the amount that we are not going to collect. And so that's important for us because on the balance sheet, our accounts receivable will show the realizable value of what we should collect. And so how do we make this estimate? Whenever we estimate under the allowance method, we must create an expense for not collecting on the account. That expense is called bad debt expense. Sometimes other companies may call it uncollectible account expense. Simultaneously, we are also gonna estimate the portion that is not going to be collected. And with the allowance method, we create a contra account that's gonna reduce the accounts receivable balance on the balance sheet called allowance for uncollectible accounts. So since the estimate calls for an increase in an expense and a decrease indirectly to accounts receivable, we must debit bad debt expense and credit allowance for uncollectible accounts. Now in terms of the numbers, gang, I'm going to make another video that's going to specifically explain, if you choose to do the percentage of sales, how to make the calculations, or if you choose to do percentage of receivables, how to get to the correct answer as well. But for right now, I just want you to understand the journal entries. They will not change. Journal entry number 2, the write-off. So now we've already recorded the estimate of uncollectability on the books. And so time is going on and we are expecting to still collect on the account. But just in case, we've already predetermined an amount that we won't get. So as time goes on, the company decides to say, you know what? I'm tired of chasing these guys. We're gonna write off the accounts. And when we talk about writing off the accounts, we're basically saying removing anything that's related to that portion of the accounts receivable that can't be collected. Now, since we're practicing the allowance method, we already know that there's a contra account that follows accounts receivable appropriately. That contra account is called allowance for uncollectible accounts. So whenever we do a write-off, whenever we remove anything related to accounts receivable, the accounts receivable balance must decrease, as well as the contra account allowance for uncollectible accounts. Therefore, we're going to reduce both accounts by debiting allowance for uncollectible accounts and crediting accounts receivable. That way, we've totally removed that portion of that individual who we haven't collected from off the books, almost like the rings with Thanos.
What did it cost?
And journal entry number 3, collection of account previously written off. So as we recap the process, first we make the estimate of the amount of uncollectability. Second, time passes, and as we still don't collect on the account, we finally decide to write off the receivables on the books. Sometimes, gang, after you write off a portion of the receivables off the books, the customer comes and makes the payment. How do we handle this issue? This is an example of collecting on an account that's previously written off. It's a quite simple journal entry, but it involves two steps. The first step is to reverse the write-off entry that you made previously. And the second step is to record it as a normal collection on the account. Therefore, if we're going to reverse the initial write-off entry, we're going to debit accounts receivable, putting it back on the books, and then credit allowance for uncollectible accounts, putting that back on the books as well, for whatever the portion is that they decided to pay us. Then we have to record it as a normal collection on the account. And you know how to do that from previous videos, gang. We're going to debit cash and credit accounts receivable. And that's that, gang. In terms of the allowance method, there are 3 journal entries that must be mastered successfully: an estimate, a write-off, and a collection on an account previously written off. So with that being said, that wraps up this video. And if that light bulb clicked and you learned something, please like, subscribe, and share the channel with your friends so they can chase the bags as well. It's always a pleasure to have your time and your patience as you watch these videos, and I hope to see you soon. Bags!